Good morning, ladies and gentlemen. Thank you for tuning into Pre-Market Prep, the greatest pre-market trading show on Wall Street. As always, we've got a great show for you here today. We got some big CPI numbers coming up in a little bit at 8:30 a.m. We got some big bank earnings coming down the pipeline. Citigroup should have just hit just a minute ago, right at 8 a.m. We also got some news in the quantum space. And then coming up at 8:35 a.m. Eastern Time, a great analyst from Wedbush, Joel Kulina. He is a TMT tech media and telecom guy. Take a quick look at the markets here in just a sec. But first, let's run that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
If you're wondering out there who the heck this guy is, Brent Slava, you might know me in the YouTube chat as Slava Dabadoo. Joel is away on a much deserved vacation here. Guy is working his butt off. Let's let him get a little downtime. But we're going to still have a really good show today. Going to bring Dennis and Christian in here in a minute. Let's take a really quick look around at the markets. Following the PPI data yesterday and ahead of CPI today, S&P 500 futures up just under 1/3%. We got the NASDAQ right around there, up about 1/3%. The Russell Small Cap Index up about 0.4%. Crude oil also up about 1/3%. Gold up almost 8%. And Bitcoin trading up almost 0.2% here. Let's bring in the other guys. There's some nice charts from Christian. Christian's going to be running the charts. There's Dennis. There's Christian. How you guys doing today? Nice to see you.
The breadster. Love having you, buddy. Obviously, Brett's still working the news in the background, helping us out, run the show, making it smoother, working in the chat, and now working right live with us here. Love to have you. You're looking great, buddy. Obviously, ran the Benzinga news desk for over a decade here, so he's a great asset to our team here at Pre-Market Prep. Christian, how you doing this morning?
Good morning. I kind of like calling him the Slava. I like the Slava. I'm going to use the last name. So
I appreciate that.
That's a great last name.
Most people call me that, so I like that, Christian.
I was just going to point out. I know we're going to get to the bank earnings. Citigroup just hit the tape. They were down and they moved down initially, and I see that they are announcing a $20 billion buyback program, which apparently the market likes there.
Love it.
Yeah, so initial headline numbers hit, and they did not beat as much as some of these other banks this morning. So its stock went down to the 72 handle. But then look at the fine print there, $20 billion buyback. The other banks didn't do that, and that's why you're seeing the pop-up. So I had the drop, and now the subsequent pop here. And it's significant. I mean, we're up 3% here, so it's a nice big move here for Citigroup, obviously, in the pre-market. All these banks reporting significant earnings here this morning, and it's kind of been wild. Banks are notorious for popping, and then, so for beating earnings, they almost always seem to beat. They pop usually because the algos just see the beat and pop them. And then a lot of times you see some of these banks eventually leak it or give it back. We haven't seen that so far this morning. Most of them are holding up pretty well. JP Morgan's leaked away a lot of its gains here because it was up over 3% this morning. But I mean, Christian, how do you approach these earnings? When you're looking at these banks and, obviously they're all coming in. We know it's bank earnings day here. How do you approach this?
Well, case in point, I mean, this is really tricky, the banks on earnings. And, if you look at some of the history of some of these names and how they report, like JP Morgan, it's back and forth every quarter. I let the dust settle for the most part because, I think that the JP Morgan had really good numbers. And I was looking at their net interest ratio, which was much better than expectations. So I like how JP Morgan is setting up here. I think you got a chance to break out. There was one that I asked you about yesterday, Dennis, because BlackRock really sold off into the report the last couple of days, and I didn't really know what that was about. And I asked you what you thought about BlackRock, and they went ahead and their numbers were pretty good, and this one's up. I don't know. So do you normally trade the bank earnings, or do you normally kind of let the dust settle too a bit?
No, I trade them all, and I pair trade them, and I try to like do relationship based stuff. And even to your point, I was like, and I'm glad I actually didn't do it now, but I was talking the pre-market show. I was like, man, with Citigroup trading 74.5 up a buck in earnings and every other bank beating, I almost feel like we should short Citi into the report. If I'd have been fast, I'd been okay. But obviously the buyback here has popped it back up. I do look, like I had Morgan Stanley on this morning with Goldman. I was trading bank. I've got the XLF. I've got some of the other regionals. So, I do all kinds of different pair trades and stuff. Sometimes, even like I'll do them and I kind of know how they move. So I know when Goldman's reporting, usually Morgan will move at least 50% of the move. So just understanding those relationships can help you if you're even day trading these things. But, the whipsaw action in the banks is always tough too. But I was long most of them going into the reports. You know how I like to own stocks ahead of the reports and then sell them before the report. So I didn't take any of these through the reports, none of the specific stocks, but I do have some peer plays on, and the banks are looking strong this morning.
And then we got Morgan Stanley and Bank of America tomorrow morning. I think those should be out. Both those should be out before 8 a.m. tomorrow. Just a quick heads up.
Being that this group, they don't normally move that much, and that's why I kind of just gloss over them. It's more of the beginning of earnings season, even though earnings season is kind of continuous. But I do like that they're all like there's a bunch today. Like I kind of feel like get all the bank names out of the way a little bit, and but other than that, like it brings up a good point, because sometimes, like Dennis, I think that's the way to play them, is just kind of say, okay, a couple of them, if they're up, it makes it a higher bar for them for the next one to go. And you were right, by the way, on the Citigroup. It was up about a buck or so, and it did sell off. So you had to be really quick with with that. But I will give you the credit for being right, but you had to be quick.
Again, when you announce a buyback, none of the other ones did. It's going to pop in there too. Wow. So, I mean, we could go through a few of these reports. Maybe go to Goldman, Brentster first, if you want to give the reports here. Me and Christian will give some analysis, because it is obviously one that really beat. I mean, this is just Goldman always just kills a number. I'd like to know, do you have the stats? Like, you've obviously been there a while, and I'm throwing you under the bus because we don't have that prep, but it just seems like I can't remember Goldman Sachs ever missing earnings. It's rare for them to miss earnings, is it not?
Literally like a few times in, 10 years, like literally.
Yeah,
I don't have the stats offhand, but for today, for the Q4 report today, they reported GAAP earnings $11.95. That was compared to, maybe doesn't compare because maybe the analysts were using the non-GAAP. I'm not sure there. $8.30 was the estimate.
Does
so like
compare.
You said, Dennis, that does compare. A $4 beat.
That's how much they beat.
Oh my gosh. And then sales, $13.87 billion. Analysts were looking for under $12.4 billion. Another huge beat there from Goldman, and shares trading up pretty decently here this morning.
Well, here's the thing with Goldman, though. While the numbers are great, and you would think that the stock would be up on this, but it just doesn't move that much on earnings. If you look at the last 5 or 6 reports, there hasn't been a quarter where on earnings day it moves more than 3%. So it's really tough to make a lot of money on something that, on an earnings trade for that. To me, it's more about the trend. And yeah, I mean, I'm going back going back about 15 quarters. I only see one quarter, and that was back in 2021. Where Goldman went up 3.8%. That's it. That's your biggest upside move. It did have a bigger down move, but these things just don't move that much.
Wow.
How about Wells Fargo, Dennis?
I'm going to stick with my original analysis. I hate chasing banks on earnings. And to what Christian is saying, if we're saying, they don't move that much, it's already up 2%. You think it's going up 4 or 5 today on this? It's a great beat. I mean, if they come in, maybe, but banks just, again, they have their day. Every 90 days, they have their day where we're talking about the banks. And, it's like, oh, it's bank earnings day, and they're kicking off earnings season. But, you think about 10 days from now. Is anybody talking about the banks? Are they sexy again?
Nah.
Probably not. We're right in a mega cap tech. So I always kind of think about what's the story that's coming that's going to continue to be the driver. And the banks never have their story after they have their report. They have the report, they pop, they do their thing, maybe they hang out for a day or two, and then people are disinterested, and that's why the leak eventually happens. So I think chasing the banks into earnings here is a mistake. So I'm going with Christian, just saying that, these things typically don't move 4, 5, 6%. Goldman's already up 2. I mean, if I was up 2% in this, I'd probably take the money and run.
Very good. Do we want to talk about the big call from yesterday? Somebody made a really big call on an out of favor group, kind of coming from left field. This call was, and I'll stick with my baseball analogy, and it was kind of a home run call yesterday. So, what did you see yesterday?
The quantum stocks, yeah. So we talked. It was the setup. It was kind of like the perfect setup because the RGTI especially. Because I liked it down the 5 handle because I've just seen 5. It's where, a lot of optionality is on stocks, the 5 print. It's where stocks become marginable. It's just a big number. Just remember that, folks. When you come into 3, 4, stocks going to 5, if you're trading small cap stocks, it becomes more difficult. They become marginable after that in a lot of brokerages. Obviously, brokerages have different rules. But, 5 is just usually a big number. So we just saw RGTI drop from $20 to $5 in 3 trading sessions. I just felt it was overdone. So I was buying at 560, 570, 580. You won't see that on the chart, but that's where I was buying that after-hour session. I came on pre-market prep yesterday, and I said, I think there's a potential for these stocks to turn around a bit, to bounce. I said RGTI. I said, I don't think it's going back to 20, but could it see 8? But not only seeing 8, it's seeing 979 here right now. Christian, you were with me on this call. You agreed, so I want to give you props as well. I just beat you to the call. It sounded like you wanted to make the same call, which made me more convicted in itself as well. But what is also interesting is we have a catalyst here this morning that Christian brought up that is just fabulous. And I mean, not so much in a fabulous stance like, ooh, this is going to be a driver here, but just Nvidia backing off Jensen Huang's comments to a certain extent this morning. Nvidia comes out with a press release, and they announced a quantum day to illuminate the future of quantum computing. So just reading, Nvidia is celebrating and exploring this remarkable progress in quantum computing by announcing its first quantum day on Thursday, March the 20th. I've just got to laugh out loud at this. So you can totally see what has happened behind the scenes. Is obviously Jensen Huang had the commentary at CES saying, look, quantum computing is really 15 to 30 years away. All the stocks got murdered in that 10-second comment by Jensen Huang. And, we saw RGTI and IONQ, QBTS, just go through the list, QUBT, all moving significantly lower and getting killed, losing 70, 80% of their value in some cases off Jensen Huang's comments. So behind the scenes, the video is like, holy crap. You totally murdered those stocks. Like those companies, we murdered them with those comments. Like, what can we do? Like, we need to fix this. So what they do is probably behind the scenes the last couple of days, how can we fix this? Let's do something for these companies. And it announces a quantum day. That's what's happened here, folks. This is not a coincidence. This is totally Nvidia backing off and trying to say, how do we fix what we just did to the quantum sector? That's what they're doing. So that is just hilarious in itself. The stocks are popping this morning because Nvidia Quantum Day. Yay, we're back. I'm going to stick with what I said, though. RGTI, not seeing 20 anytime soon, maybe never again. I know it's only a double from here, but I don't think so. So if I was in RGTI at this point in time, yesterday at this point in time was 6. I said I kind of liked it down there. I said I bought some. I'm already out. I'm sold. I'm gone. If I had it, I sold it yesterday. So I didn't participate in any of this move here today. If I was long RGTI, I would sell it right now because as 10 is big, as much as 5 is big, is 10 is big. It's popping because of these quantum computing, this Nvidia thing. But when you really read between the lines, I think this is just, Nvidia trying to undo a bit of what they did. The damage is already done, though. I think the RGTI, as much as it was a buy yesterday, is a sell today. Christian, what are your thoughts here? Because you've been all of this quantum trade too.
Well, yeah, it's funny that announcement comes out and I don't think Jensen is one of those CEOs where like he's the evil guy to say negative things about companies. He's a much more friendly type of, especially other companies when he takes the stage and he goes over, he's presenting. How many companies does he name in a positive way? Like, hey, we've got a partnership with this company and this company. So it was, I don't think he really meant to do it and didn't realize the effect until afterwards. So yes, this is a makeup play for this, and that's a heck of a call on RGTI. And another thing just to mention about this group, something that we've discussed on the show a little bit of like trade school, is that this group is very, very volatile. I had mentioned it before when all these things were going to the upside, that these are more day trades, or they're very quick trades. You can't, in my opinion, you can't really have a big position in any of these things because the volatility is too much. So, I don't think anybody should really be playing around with these names like that much and too much size, because the volatility is crazy in these names. Now, I agree with you on the RGTI. We'll see what it does. I've got a real nice technical level to watch here, which is 960. And I think if it can get through that, then the next area to watch would be about $12. I still like this IONQ because I think they've got a little bit more than just running on momentum, even though this is also momentum, but not just as much. I would be watching as the level that I mentioned yesterday is $30. So it is decently, off the made a nice move from yesterday, which was around 27, $28. But these things, as we know, they can move a little bit more. So it still has some resistance to get through in 32.62. But, if you're in one of these things, you've got to really be paying attention closely, because you could go get a cup of coffee or whatever, and these things can move $2, $3. The volatility is just so much different than trading, bigger cap stock. So that's the one thing that I think really to mention with these names is that that they move the volatility, and I tend to use the average true range to kind of tell me like what the average move of the name is doing, and I divide that by the stock price and give you a sense of like what the percentage move on a given basis. If that percentage move makes you like, if it doesn't sit well with you, then you don't trade the stock.
Right.
Yeah.
What was that
Completely
message that you just put up right there, Dennis? I wanna highlight
size
that real quick.
appropriately here. So it was Gabe, and again, I was just like he's saying exactly what Christian is saying here.
Right.
I mean, Gabe's been in the chat for a very long time. The clown meme's awesome. Size appropriately. I mean, these things are moving around 50% in a day here. You don't put half your account in something like this because it can fall that quickly as well. So one thing I've always done is stay diversified in my long-term portfolio, but I also stay diversified in my trading account, because bad news happens, stock halts happen, commentary that makes stocks fall 50% a day can happen. I mean, if you're in the Cokes and the Pepsis, it's very unlikely, but there is obviously commentary that can really move stuff around. My rule of thumb, and this is a good question for Christian too, I'm curious on him. My rule of thumb is never really to have more than 1 to 2% of my long-term portfolio in any one position. Although when I'm really convicted, like in Tesla, I might move it up to 5, 6, 7%. In my trading account, I never usually like to have more than 7 to 10% of my net worth in one position. Like I will sometimes expand it a bit. So I'm a little more aggressive in the trading account than the investing account, but still staying diversified. I don't like going over 10% in any one position. So if you got a $100,000 account, for instance, I wouldn't put more than 10 grand in any one position, just because. And in this case, with these stocks moving around this much, I'd probably play a half size position. So if I'm usually putting like 5 to 10% of my capital at work, maybe I'm putting 2 to 5% at work. That's how I do it. How do you size, Christian? Like, it's a question that we don't do often on the show. And some traders are like all in. They like, oh, bang, our account's in, they're out. They trade 1, 2 stocks and they're in and out. That's not me.
Yeah, what you're saying for long-term portfolio, that's the way that I actually run. I have a longer term. It's called the trend portfolio, and generally, like I'll have some names that are really volatile, and I'll keep them at like 1% of the portfolio. If it's something that the volatility is not that large, I will bump up to like 2 or 3% of the portfolio. And if it's an ETF that I'm looking for, like to grab the whole, like sector move, the ETFs aren't going to move as much. So I'll keep that, I'll actually have them and I'll bring them up to like 5% of the portfolio. If I really think that there's a big move that's happening or a theme that's playing out, I'll have the ETF much more of a higher weight, because again, I'm looking at how much these things move.
Yes.
And associating some volatility to them. In my trading account, it's a little bit different, where I have much more of a concentrated position style where I could have anywhere from like 3 or 4 positions on to 14, depending on how the market is. Now, of course, we're not in that situation now where I'm going to hold 14 positions or 15 positions because the market is pointed downwards. So I'm going to be more conservative, but I'm going to exploit, areas where I think that are holding up well. And we could talk about that. Maybe we'll talk about that a bit after we have this little report out this morning in
This
about
little
10
report.
minutes.
Good
Called the
segue there, Christian. Yeah, 10-minute warning here on the CPI. You guys want to give the estimates here right now while we're at it?
Yeah, sure. I have the estimates for the month over month CPI. Very similar to yesterday, where they're looking for like a hot number. And let's see. I don't want to jinx it because I think that this is an easier number to kind of come under. They're looking for 0.4% month over month. Then when you strip out ex food and energy, they're looking for 0.3%. The year over year number, which again, I'll just explain very quickly how they come up with the year over year number, is they take the last 11 reports and then they tack on the new report, but they're looking for 2.9%. Ex food CPI ex food and energy year over year, they're looking for 3.3%. So that's what we've got. I did take a look at what the S&P is implying for today. It's about a 1.1% move. So they are pricing in a decent move for this.
Yeah.
As yesterday, and I wanted to also, as we've got that report in about 8-9 minutes, I also just wanted to get Dennis's thoughts too on like the price action that we saw yesterday with that number that came in better than expected yesterday. PPI was 0.2 versus 0.4, maybe not as important as the market gauges for the CPI. But what did you think of the price action yesterday overall?
More of the same. That
Yeah.
chop,
Yeah.
that fade. I mean, it's like not just chop day to day, it's chop intraday as well. I mean, this right now so far has been a very, very choppy year where we've seen, obviously we saw the sell off on the first day and then the big rally, and now we're going to continue. Nvidia made new highs, and it's like away we go. Then the rug pull in 3 days, 4 days down. Now we get, a light, PPI number there yesterday. Was it PPI? I'm forgetting already. I believe
Yesterday was
so.
PPI. Yep.
And then we
Producers.
popped, and then we gave some of it back, and now we're going to get a CPI number here in 8 minutes. So, I mean, it's been a wild, wild ride so far. Again, I'm going to stick with my, full year call here. And again, it's hard to call something out 12 months. Hard to call something out 12 days, let alone 12 months. That's why these acronyms are so difficult to do. But I'm going to stick with the call that I just think it's going to be a choppy year, like very choppy. So I don't think we're going to get a lot of I think contrarian strategies, those that are selling into strength and buying into weakness, are going to win the day in 2025. That's what I think. So again, I'm trying to tool myself because really, and I was saying this on Dave Lauer's podcast yesterday, really when we think about it here, Christian, we've been in a momentum market, not just for a couple of years, but really for a decade, where momentum strategies have really ruled the day, where you buy in breakouts and sell in breakdowns or shorting breakdowns. I mean, you can look at like 2020, the momentum year of all momentum, where we just went straight up. Then the rug pull in 2021 was really a momentum year as well. It was just momentum to the downside, where it was just stocks were just going straight down. Then 2022, beginning of it, we hit the bottom. End of it, obviously, we started taking off. In the last 2 years, straight up again. So, I mean, when we really think about it here, we've had years of momentum up, down, and then up, where we're not getting a lot of oscillating, action here. I think this is going to be the year where we have a lot more volatility, a lot more rug pulls, a lot more lack of follow through. And that's why I'm trading a little bit different this year. Not so much looking for breakouts, but looking for stuff that's overdone to short, or alternatively stuff that's oversold like RGTI yesterday to buy.
Yeah, you're making a really great point here because I struggle with this where the market changes and you have to change with it. You have to make adjustments. And, it's one of the reasons why, I come on here every morning is because, Dennis and I are different traders, and I like to pick up on how he trades the market. And when he's in that sell the rip mode, I need to make adjustments too, because I'm more of a trend trader, and I'm looking for things to kind of continue, but that's not what the market is doing right now. And if you look at the price action yesterday, I call this shoots and ladders, because the price action, you're up a little bit, you think that you're going to turn higher, and then all of a sudden there's a sell program that comes in and just kind of takes us down, and we built up again, in the afternoon, and basically back to the open price. It was just back and forth price action all day today. So that's one of my questions for today, with this report coming out in about 5 minutes, is, are we going to see the same type of things take place today? Is there going to be a sustainable rally? One of the things that I thought was very interesting too, when we talked about that number that came out yesterday, and here's where the PPI number came out yesterday, just looking at a 5-minute chart of TLT and the bond prices, but bond prices started to go, and TLT was up about 0.5%. And then all of a sudden we saw, like, not so fast. And, TLT was just kind of bleeding, till about 1 o'clock, and kind of came back a little bit. You've got a little rally that's going on in bonds this morning. So right now, the market is very fixated on the equity market is very fixated on what bonds are doing. So I think for now, you also have to keep an eye on what bonds are doing, because the market seems to get very uncomfortable when bonds begin to kind of move lower right now. And just looking at this chart, just going to bring back the daily chart here. Notice where we are here on the TLT. We're kind of back to back to the lows that we were in April. So this would be a perfect spot to bounce. I'm not sure if I want to really call a bounce here, but I think that this would be a great place for the bonds to get to bounce here. I would like to see a move above the 5-period moving average. And I think if you look at the S&P really quick and just notice what happened yesterday too, I look at things like the 5-period moving average, because it tells me what the short-term trend is up to, and price really has kind of sustained below here. I thought that there were all kinds of tricky moves yesterday too, in terms of like what was performing and what was not. And I was looking at Nvidia yesterday, and there is a story out about more curbs on Taiwan Semiconductor and Samsung chips and so forth. But you're looking at this name and it's teetering again. Will the buyers come in Nvidia and support this around 131? But it certainly seems like, Dennis, that this thing has lost its momentum.
It has. And I bought a little bit more Nvidia there a couple days ago in the long-term account. I almost feel like dumping that back. It's right about this price, that extra shares that I bought. I still have the core position that I'm in from $40, which was last year, which I don't intend to sell. But I had bought some extra, thinking it could bounce around this 130. But what I know is, when you come down to a level and you bounce, then you come back and you test it again. And you test it like the third time, it almost never holds. I always say no such thing as a triple bottom. And I feel like, even though the market, and again, this rotation has been pretty strong this year into some more value names, or obviously in the banks, the energy stocks, lower PE stuff win the day. I mean, Nvidia is not that stock. So again, it's a very crowded long too. So I actually feel like Nvidia is feeling like, short term, that it's got some more pain ahead for the long. So I'm actually a little bit nervous about that extra position I took in Nvidia, and I may sell some of that today.
Yeah, so a couple things to mention, and we've got CPIs coming out here in 2 minutes, but we're gonna talk a little bit about the rotation that we're seeing on the tape after our guest today. I want to specifically talk about what's going on in energy. But it's also, we've got a lot of earnings reports too. We've got Taiwan Semi that's going to report. I believe that's tomorrow, and I think that's going to be really interesting for what this group wants to do, because this is one of the better acting semis. I'm very curious to see what this group does, but right now it just looks like there's not any buyers that are really coming in. Perhaps some of the headlines are dominating a little bit in terms of like short-term stuff.
And Taiwan Semiconductor being down today is a tell right now. Again, everything might change in 1 minute here. Maybe we should quickly preview the CPI. We'll throw it to Brentster to quickly preview this right now.
Yeah, sure.
Coming here right now. But I just want to say Taiwan Semiconductor is showing some relative weakness here right now. So keep an eye, because that is a concern for the chips. Brentster, give us that preview on CPI.
So base figure, we're looking for a month-over-month reading up 0.4. Core CPI figure month-over-month up 0.3%. The year-over-year figures, we're looking for 2.9% base, and the core reading, we're looking for 3.3%. Dennis, you are probably going to hop off here in about 30 seconds and trade, right? Okay.
Yeah, I'll just go in the background for a few minutes here.
Okay, cool. So Christian and I are going to break those numbers. We're going to get you the numbers in real time here in about 20 seconds. This is the all important figures here today. And then we're going to just take a real quick look around at some of the price action in the markets following those figures. And then at 8:35 a.m., we're going to be welcoming on Joel Kulina from Wedbush. I'm sure he'll want to talk about the CPI figures. Here they are. CPI figures.
Right in line with expectations, 0.4 versus 0.4. That's the month over month. So coming in right in line with expectations.
What is the market? What are the markets doing here, Christian?
Markets. So let me sorry, I'm just trying to, and we're
Oh, you good?
actually rallying off of that number. Let me just bring up one other thing here quickly.
And let me just get those full figures out. So we had the
Go ahead.
core CPI figure month over month up 0.2. That was just a little lighter than expected. Estimate was for 0.3%. The core CPI year over year up 3.2%, also just a little bit lighter. And then those base figures, which do not exclude food and energy, were right in line, as you were saying. Base reading month over month 0.4%, and then the year over year figure 2.9%. Let's see what chart you're just looking at. A SPY there. Any other notable markets moving here following those all important CPI figures, Christian?
Yeah, the other things are moving the right way. So let me bring up. Sorry, I'm reading too some of these numbers.
You're good. You're good. Do
the
your thing.
TLT is making a nice move. I'm looking at the 30-year bond futures as well. They're doing what we want to see. For if you're a market bull, they're doing what you want to see. They're up 0.7 percentage point. Also, when you look at the two things that I really pay attention to are the dollar and what bonds are doing, and the dollar selling off too. I don't think this UUP is trading here, but I do see the dollar futures selling off about 0.5%. So those are the two, like, the headwinds for the market is a stronger dollar and higher rates, and both of those things are cooperating. So this is the initial reaction. Let's see. Also, I'm just going to bring up, because I know small caps love to move big.
I love that point that you made the other day.
Yeah, the small caps love to move big on economic data. You've got Russell futures now up 1.8%, and you've got S&P futures up 1.1%. So that's a really strong initial reaction that we've got going on.
Dennis is back
Keep
already.
an eye
What's
on
that
this
mean?
590, because this was a number that I talked about yesterday when we were 584, and I was kind of like feeling like that's where you'd run into resistance again. People were asking me where you'd be interested in shorting the market again.
Yeah.
Probably up near this 590 level. I think you do find some resistance. The number is good. The number is decent. Actually, CPI year over year on December was down a tick, plus 3.2 versus 3.3. So the numbers are good here, and that's why the market and the algos are going nuts here. But remember the kind of environment we're still in. We're still in a choppy environment here. So it's hard to chase. You get these big moves here. Money isn't made chasing. I mean, you're getting a nice pop, but now I would think if I bought a couple days ago into the dip, which I was doing, I'd be more selling into this strength as opposed to like chasing this. We may continue. Maybe it goes 591, 592. I mean, you never get the absolute top. But if you just look at where we just came from, yesterday, 2 days ago, 575 on SPY, we just popped 150 S&P handles in 2 days. After everybody's like, oh my gosh, it's over. Here comes the bear market. No, it's a whipsaw chop action fade. Again, as much as I'm buying a couple days ago, I'm thinking more lightening up into the strength here today.
Dennis, what was the Dennis trade indicator here? How many trades did you have on right there? It seems like you didn't have too many.
I don't have that many on right now. I got 19 on right now. So
I feel like I like to use
trades.
the amount of trades that you have as an indicator of mayhem in the markets. Like Dennis is like, I got 400 trades. Not really, but I remember a couple big data points where you're like, I have literally 20 trades on right now. I can't be on the show right now.
20 is life for me. 20 feels like a walk in the park of day trade. A lot of times, I know like some of my traders at Bright Trading have 300-400 trades on. They're managing, manually managing that crap. When you have that many trades on, you're just looking at overall market exposure. you're sectoring it, meaning, you've got groups of stocks that are here, and then you're just lagging out of here, lagging out of there. I'm light right now. I'm hedged, perfectly hedged right now, leaning a little bit more to selling into this dip light or this rip right now at 590. So I wouldn't be, I'd be inclined to actually sell into this right now, actually, as we're talking here right now. So, which I'm probably looking to do. Again, some stocks are just illiquid, so you're just not going to get out of certain things in the pre-market. I mean, there's obviously certain stocks like Tesla that are always very liquid, and you can get out of those. I mean, Tesla's up $15 right now. It's a big pop here, folks. It's been chopping around here for a bit. Yesterday's high, 422. We're $10 away from there, but I mean, this is a big pop. And as much as I said I feel like lightening up my Nvidia, well, look, boom. You got a 3-point rally to sell it into. So I'm probably am going to lighten up my Nvidia that I bought in the long term a couple days ago, because I still think, I think leadership has changed to a certain extent here this year. And we talked about that. So I think, you've got to start looking, more to the value stocks. They're popping here this morning. So today's not the day to look at those. But a couple days ago, it was for sure. So I think more balancing, and looking, maybe not just going to be AI year here. So AI stocks all popping right now. But remember, lower rates, really help small caps. They help, other things more so than they help the Nvidias and Tesla. It helps because Tesla needs to sell cars. So it's a little bit different story, but more so than the other mega cap 7.
And let's get another perspective here. We're going to welcome on our guest, Joel Kulina. He is Managing Director of TMT at Wedbush. Let's add him here. Add him to the stage. Joel, good morning, sir. How are you?
Yeah, good morning, guys. Thanks for having me back.
Of course. What did you think of very quiet day here on a Wednesday? What did you think of those CPI figures right away?
Yeah, I mean, obviously everyone's looking at what the 10-year is doing. So we pretty much 10-year was stalling around 480. We're down to 470. Now down below 469 now. I'd sum this up as a massive relief. Obviously, this has been a very frustrating and choppy start to the year, especially for tech investors. And people sort of have had this CPI data point on the calendar really since we got the last one in middle of December, and we've obviously got some hotter pieces of data in the interim. So I say this is a major relief, and positioning's been pretty clean. There's been a lot of people just kind of sitting on the sidelines, and there's just been a lot of moving parts to start the year that both tech, and professional investors and myself lack edge on, and that's data points like CPI, the multiple Fed updates, Trump inauguration, tariffs, TikTok. All the Nvidia noise in between as well. So it's been a slippery slope.
Yeah. So, I mean, you just laid out a few good macro items there for the tech media telecom space. But I mean, overall, how are you feeling about the space heading into the rest of 2025?
I think it's going to be a lot more difficult. I mean, I know that's stating the obvious, but when that calendar turned, a couple of weeks ago, my conversations, and I was down in New York not long ago as well. People were nervous, and you just didn't pick up those vibes, 12 months ago. Whereas, things worked very well for most of 23, and obviously last year was a great year. People were nervous. Valuations are obviously a lot more demanding, and with rates continuing that upward rise that they were, it was just sort of it was a headache, to say the least. But within the sector, there's been some great price action under the hood. I think if you look at names like Robinhood, got a lot of sell side love yesterday. Roblox, Amazon, Instacart, Reddit. There's been some growth momentum leaders from last year that are continuing that trend, and those are names I've sort of been kind of focused on. That you want to be buying the dips when they're very shallow in a period of this type of uncertainty and volatility. I think that's pretty telling of where names people are kind of focused on.
Hey, Joel, great to have you on the show again. And I think the last time that we had you on was about a month ago. And there's a lot that's changed since then. To your point, the market moves quick, and especially around the beginning of the year. Just looking at what has transpired, with things like a lot of names, like I wanted to bring up like Palantir as an example too. Yeah. But, very strong names. It just seems like a lot of profit taking and a lot of just momentum, that upward momentum that came out of the markets. So I guess I have a couple two-part question for you, but, what do you think about Palantir around like the 50-day moving average bring the chart in here in a second, but around the 50-day moving average. And then just the other point that you made, that some stocks are like a Robinhood, are just, are doing quite fine. And
Yeah.
there really isn't much of a pullback. Now, it didn't close on the highs yesterday, but the relative strength in something like this, much better. Do you view that as really like like just a good signal? Because a lot of these names have not reported earnings yet, but really showing, the names that are showing some strength in a difficult market for tech right now may end up being your leaders. Just your thoughts on that.
Yeah, I guess I'll start with Palantir. It's obviously a name that Wedbush and Dan Ives have been very bullish on, from when the stock was a teenager, and he's absolutely nailed it. They're obviously, continuing to gain a lot of momentum on the AI front of things, and obviously they're very close with the incoming administration as well, and just with their relationship with the U.S. government and federal. We've been seeing dip buyers of the stock for what that's worth below this 50-day. We have, looking back, there's been some periods where you have broken the 50-day, but people have defended it. And again, I think this roll from really since kind of Christmas Eve until, yesterday or the day prior, again, that's been more a function of just some of the, macro forces that have kind of been driving, the animal spirits, and maybe some froth coming out as well. But this is definitely a name that we continue to like here. Overall with the market, I'll try to answer that question. Yeah, like I said, it's sort of, just hanging on to those relative winners. And I think that's very, very important. Like, Dennis kind of was talking about Nvidia. Here's the momentum, market leader for the better part of the past 2 years, and every little uptick is just sold. Is sold rather, and again, I don't think you can ignore that. And now the problem with Nvidia, they don't report until February 26th. GTC is not until middle of March. So I don't think you're going to see people, money flock to this name quite yet. It probably chops around a little bit, but again, I think you want to look for names again that like Reddit, Amazon, Roblox. That again, those dips have been so shallow, and real institutional investors have been buying on these pullbacks.
And we got to hit the other big earnings names here. Netflix next week, I think on Tuesday. What are you expecting for Netflix next week, Joel?
Yeah, kicks things off for big U.S. tech. Always critical there. I think the implied moves around 8%. Conversations with investors, people are kind of looking for Q4 net adds around 12 to 13 million is sort of what I heard. I think consensus is closer to 9 to 10 million, but obviously where the buy side is thinking is much more critical for that T+1 move. I think the setup's a lot better than it was kind of a couple of weeks ago. We've had a 12% pullback off the highs. They're clearly having, continued success on the live sports front. You're going to expect more announcements, as 25 kind of, continues. Their content slate remains very supportive as well. And I still view names like Spotify, Netflix, where they're just still very unique assets in a very kind of grim, media, landscape, right? Like there's just no appetite to be buying Warner Brothers, Paramount, Comcast, Charter. Like they're still very unique, and I think that's where there are two assets you want to be owning long term. And I think when you get these type of pullbacks, you definitely want to be taking advantage of it.
I wanted to ask a quick question about Reddit, because Reddit has been holding up pretty well. What scares me about this name a little bit, and I have a little bit trouble holding it even as a trader, is valuation. Do you view Reddit as just a bit too expensive, or do you think that just the future growth of this company kind of trumps that for now?
Yeah, I think that the future growth right now trumps it, and I think I was a lot more. I mean, obviously, we'll see what rates do in the near term, right? Just a 10-minute knee-jerk reaction isn't set in stone. But I think what I like about Reddit is that checks just continue to sound very, very good. They're strong, and especially what the street is looking for. And typically, it seems to be setting up for an acceleration on tougher comps. which typically means we're going to get another gap to the upside. They're becoming a real player in advertising. The Google deal has just been absolutely massive. I don't know if you or any of your users, you go on to Google now and you go into search and you get a ton of Reddit, right at the top of your news feed, and that wasn't the case not that long ago. And also what they're doing with foreign languages as well. They're rolling that out international, and it's a very, again, another very unique asset. And all the major large language models, they want access to their data. You're talking about two decades of just whatever you want to call the Reddit platform, but there's a lot of data that they hold, and people want a part of it. And that's obviously going to continue to kind of fuel the multiple and growth story.
Joel, I want to circle back to Nvidia here. You mentioned it here. Stock's getting a pop, obviously, with every other stock here this morning. It just feels like the momentum has kind of slowed down here. I mean, we're seeing rotation into other names. 2024 laggards that were forgotten are getting bought here so far in 2025. And there's Nvidia sitting down near its 2025 lows. Is this concerning to you? What are your thoughts here from a valuation perspective, from a long-term perspective? Is the AI story just continue to drive this name? Or is there like a consolidation period or maybe even a pullback here as the trade is, obviously crowded?
Yeah, I think, you touched on it. And I think really Nvidia just, it obviously was a market leader, momentum darling for so long, but the tape is just telling us something different. And here's the reason why people have been concerned. There's been a lot of obviously uncertainty regarding China and elevated restrictions as clearly the U.S. wants to make sure China doesn't have access to these high performance chips. And there's just checks out of the supply chain remain tilted to negative. I know Citigroup had a negative call yesterday talking about regulation risk. I think KeyBank cut their numbers as well. Nomura, their Asian team, was out with a negative note, and they all kind of point to just lingering issues regarding this Blackwell ramp, and that's a big problem. And especially you've had ASICs over GPU, so ASICs are more customized silicon chips, and that those are being kind of manufactured by names like Marvell and Broadcom. And look at those two charts. They both gapped higher in December, T+1, and they've been holding on to those gains. And again, that's very, very telling. Whereas Nvidia, they popped the 150, not long ago. God, I think it was a week ago, and it just faded once again. Versus just seeing Broadcom and Marvell, in my opinion, are better names to own as people are looking for other solutions within the AI supply chain to kind of, I won't say displace Nvidia. They're still the market leader by a mile, but there's increasingly more solutions that are coming to the market as time kind of progresses, and I think you have to be very cognizant of that. So where's the growth? I'd say there's more potential upside numbers for Marvell versus Nvidia.
Like it. Yeah, I mean, these are two companies that had really good earnings, both Broadcom and Marvell. They've been on my watch list too, to kind of look to pull the trigger on these. I wanted to ask you another one that's been showing some really nice strength in a difficult couple weeks for tech, and that's Roblox. Roblox is right around the highs for the year. Talk about your relative strength in a space. What are your thoughts about Roblox here?
Yeah, I think I front ran a little bit. I kind of mentioned it earlier. I love it, and third party data has been very supportive. I think M Science raised their bookings last week as well, so that obviously a big indicator for the hedge fund community. But bulls also believe that AI is rapidly helping advance their video game content creation, and given Roblox positioning, it's going to help them quicken the content engagement flywheel within their ecosystem. Expectations are creeping higher. So that's sort of is the only things that people are sort of kind of concerned about. But as we speak, I think in the pre, stock is right at, I think it's almost right at 52-week highs. And I'm just in the camp that you want to be buying these relative winners in tech. Given names like AppLovin that are that got destroyed a couple of weeks ago on a negative Bank of America note. Even Palantir fell 10% on a negative data point as well. I like the names that are kind of holding in really, really well, and I think they're getting more credit for where the story is heading.
Just one more question for you too, because I know like the AI is such a big theme, of course, right now, and I know this is not exactly in your wheelhouse of names that you cover, but what is your opinion on all these power names,
Yeah.
that are doing really well? Do you get questions a lot about, what VST is doing and a CEG and even a GEV, which has been, I'm long that name, and it's just
Yeah.
been so impressive. How many, like, even though you don't, right, you don't cover those names,
Yeah.
but
Yeah.
you probably get questions.
Unfortunately, we don't cover energy here. We don't cover utilities, and then obviously, I think what I generally really, when I was on the buy side, though, a lot of tech PMs have exposure to this secular theme more via kind of custom made baskets from some of the bigger brokers, and I think I highlighted it in one of my notes earlier in the week. Like Goldman has this power up, I call it the AI power up basket, and boom, that thing just hit, breaking out of its recent range yesterday. You mentioned GEV 52-week highs yesterday, up again this morning. I mean, it's been evident for over a year, or maybe a year or so, when these things really kind of caught fire and momentum, that not just the U.S., the world is severely not prepared for this need and demand for data. Whether it's obviously
Mhm.
EVs and artificial intelligence, increasing usage of large language models, the grid, it needs serious upgrade, and this is going to be a multi-year type of trend as well. I mean, talking, it could be 10 plus years. So I think the only thing where it has me concerned is the wide range of investors that are here. You have industrial, investors, utility guys, generalists, tech. But again, I think look at GEV. The stock was still up like 250%, and it's barely even had a downtick in 2025, which I think is very
Mhm.
telling what people think of this long-term trend. So yeah, it doesn't come up a lot in my conversation. Sorry to kind of rant for a little bit, but power up names, you're going to want some exposure, because this is a theme that's real, whether it's nuclear power, GEV, they do the small nuclear reactors as well. This is a trend that governments across the world, they need to invest in their infrastructure and the grid, and these are going to be the winners.
Thank you so much for the rant. I appreciate it, and I know it's not in your space too, so I appreciate you giving your input on these.
You made,
It-
made me think I got to dig out a sector piece on that. That's what I would encourage everyone to do. Try to get your hands on some sort of sector thoughtful, more thematic piece on AI and energy implementations. Just given, because all the
Great
stocks
idea.
have gone up 2 to 3x, and just do a little bit more homework. But this is a theme that's not gonna go away.
Real quick here for you, Joel. Maybe one more. Switching gears. Do you have any ideas right now that are more on the bearish side of things?
I sure do, and I know my man Dan Ives here will kind of disagree on this one.
Uh-oh.
But I've been sort of negative on Apple for a while, and I don't know if you guys caught Zuckerberg on Joe Rogan, and I'm not a big fan of Mark Zuckerberg. Not that matters to him, but he dunked on Apple pretty good on Rogan's podcast, and I don't think he said anything that was really wrong. That they really haven't been totally innovative over the past 15 plus years. They've just built this walled garden and an ecosystem to really make it difficult for other people to kind of infiltrate their user base. And now you have Zuckerberg going to Mar-a-Lago and donating to the inauguration campaign. Now I know Apple's doing the same thing. Now, with that said, just looking from a fundamental point of view, there's been a flurry of negative news to start the year. Price cuts in China, foreign phone sales. They declined for the 4th month in China as well. And now I think China was out saying they're going to subsidize domestic handsets. So I think there's a little bit of a problem here. Apple's obviously benefited from their multiple rising, but also AI intelligence. I've used it a little bit, and I've been disappointed, and I know a lot more people have had a lot more colorful responses to how user friendly Apple Intelligence has been up to this point. Whereas Gemini, it's a great product. So Apple's, I think, going to be a funding short, going to struggle, and also Adobe as well. Now this is a stock at its lows, but I'm just very skeptical given their slow AI ramp and competition just continues to kind of increase, and I don't find the valuation that compelling. But look at Adobe stock, pretty much on its lows, and I just, similar to Advanced Micro Devices as well. I think these are stories where they're at their lows. There's been no buyer. They're flushed out. but buyers are higher set up. Meaning, if the stock's gap 10, 15% higher, you can buy and chase these if the narrative shifts in a meaningful way. And that's sort of where I sit. So I say Apple, Adobe, AMD are names I kind of lean to bearish.
Awesome. Well, thanks for joining us here today, Joel Kulina, Managing Director, TMT at Wedbush. Hope you have a wonderful day, sir. Thanks again.
Yeah, good luck, guys.
Thanks, Joel.
Take care.
Thanks,
Bye.
Joel.
And
I think I just want to sum up what Joel was saying here. I feel like it's a little bit, again, this year, and what he was leaning for is a little bit of the changing of the guard, where the leaders of 2024, which obviously was the Magnificent Seven in Nvidia, but even this commentary to Apple, something that we've been talking about on this show for a very long time. I've talked about Apple lacking innovation, where stuff they've come out with hasn't really been that great. I mean, you think about even Vision Pro, the recent release of it, and everybody was so pumped for it, and then it came out and kind of flopped. I mean, if you look back, was what Zuckerberg said really, was it, inaccurate? I don't think so. I think it was actually very accurate.
Yeah.
So, and I've said this on the show for a long time. They've lacked innovation since Steve Jobs has died. I mean, Apple really has been a buyback story and the iPhone cash cow. I mean, right here. This is what continues to drive, corporate profits at Apple. But, really, you take away that iPhone, what's Apple got? What's Apple got? So, I mean, they need to be a big part of this AI. They need to be a big part and figure out some other stuff. And I don't know if it's Vision Pro or not. I was really pumped for Vision Pro. I thought it was going to be great. And then, people putting it on and getting a headache from it. So, I mean, they're just figuring out, different ways. But Apple definitely, I agree with Zuckerberg, has lacked some innovation here for a while. And just back to my changing of the guard comments here. I mean, it has been a great year for those stocks off the bat here. And it is concerning that, some of these stocks are sitting near their lows, like in an Apple or an Nvidia, where the S&P's just rallied 150 handles, really with lack of participation from much of the Magnificent Seven, other than Tesla.
It's always great to get an analyst perspective too, and I view the same. A couple points that he made too that I really like is you go through the tech names and looking at what Apple and what Nvidia have been doing, and because the whole group is down. But if you look at the ones that are showing the strength and holding in there, once the market kind of gathers its footing a little bit, because we've been under pressure, those names that have just been sitting rather than declining are probably going to pop to new highs. It is such a great point for trading. And I like that, an analyst has the same perspective too, is like, hey, these stocks have been holding up really well in a tough market. What do you think they're going to do when the market gets better? And Reddit was really good because, I like I'm more of a technical person. So I like Joel coming in and giving us the fundamentals to say, hey, this is part of the story of why a Reddit is holding in there. They're in Google search and so forth. So I like that. We've got just a couple minutes to go. I was just going to, I know that the CPI is causing big moves here. And so far we're holding gains in here, which is pretty impressive. I don't see the type of move that we saw yesterday in bonds are continuing to rally. So
yeah, which is huge, huge, big difference. I mean,
go ahead. Sorry.
I'm just going to say, it's kind of like what's behind the scenes. Like I always say, lift up the hood. Yesterday's rally was built on a lot of fluff because the bonds weren't participating here. But with the bonds participating here this morning, it makes you think this rally may actually hold. If the bonds roll over, you see that TLT start to roll over and give her back, Katie bar the door, you start selling your IWMs, in my opinion. But as long as TLT is holding up, and you this morning nailed this, Christian, with the double bottom from 85, go further out, to where we were. And 3,700 views here this morning. Right now, I think is a new contract market prep. So I'm just looking at, that's combined views between Twitter and obviously YouTube, not considering some of our other venues. But just zoom out to that double bottom you were talking about again, Christian. You were looking at this 85 and you said it this morning. This would be a logical place for TLT to bounce at this 85 area. Well, here we are. It took a catalyst, obviously, with CPI, but we are indeed bouncing from where you logically think we should bounce. So the technical's kind of lining up here, which gives you a little more hope that this rally can hold.
I was just going to mention really quick because of course, with CPI and a really good guest on too. There's a lot to talk about, but I just wanted to talk about too, like what I've been noticing in terms of sector rotation that's going on. We talked to you yesterday about some of the industrials that were perking up. And even like a couple names there, like a GE looks like it's actually has turned the corner. This is a name that's kind of been going down. Now this is GE Aerospace. We already talked about GEV, which is at the highs. That's a name that I own. I've been trying to be patient with that name, but I like a 3M is also starting to turn back higher again. So I like that there's breath is starting to come back into the market. Today or yesterday was the first day in probably about a month where you had 4-week new highs in the S&P actually were higher than the new lows. And I just wanted to talk about energy really quickly, because if you go through some
Yeah.
of these names, I got long. Now I was long TRGP. I kind of switched out of this one. This one has been a really strong one for me, and I switched into EXE. So again, value was performed better yesterday. I don't know if that's going to be the case for today, considering some of the moves that you're seeing with the CPI. But I really like the trend that is happening in a few of these names. What was the other name that I had on my radar too? I can't seem to find it, but. Yeah, and ET was a name that I also got long. So these names look like they're trying to break out.
Yeah,
Not all of
energy's been
energy.
great. The energy trade's been great in 2025, and it definitely lagged in 2024. I mean, just think back to that theme: leaders to laggards, laggards to leaders. I mean, that is what we've seen in the first 15 days here, where your 2025, 2024 leaders, a lot of them are down on the year, and your 2025 laggards are really holding up. And energy in itself was definitely a 2024 laggard, and it is leading here in 2025. But just this morning, just to sum up this day, what I'm really seeing is, rally across the board. Obviously, it's across the board. I mean, everything rallying here. But, relative strength, the banks are just killing it here this morning. They obviously had good earnings, and the CPI number coming out light at the same time, or, in line in some cases, but, light on the December. Is just the doctor ordered for these companies here. We're just looking. Goldman Sachs is now trading up 22 points here. Wells Fargo was trading up 5%. Citigroup's up 5% with a $20 billion buyback here. Banks really leading the charge here this morning. Regional banks all trading significantly higher. But even going everywhere, I'm just seeing everything 1% to 2% up across the board. I still wonder if, some of your Nvidia's don't start to leak a little bit as this broadening out starts to happen. It's not good for the concentrated trader. So I still think I'm a little bit concerned on Nvidia here.
And go ahead, Christian.
There was a great comment in the room too. This is from Tennessee, talking about the home builders. Remember, this move in rates is going to get this group to go too.
Oh yeah.
And just because of that. So that's a great comment on the home builders.
We do have excuse me, we do have some more home builders next week. Just a super quick preview. We do have Bank of America out tomorrow, Morgan Stanley out tomorrow earnings. There is a lot of econ data the rest of this week. Certainly nothing as big as CPI, but we are going to get a reading on the NAHB home builders. We are going to get housing starts later this week. So just a real quick heads up. And since you mentioned it, Dennis, we do have some regional banks that are reporting tomorrow and Friday. I don't know who cares about those, but just to mention it here.
We do. BK reported
so
here
nice.
this morning too. So we did have one this morning. Bank of New York Mellon, it's up 4.5%, which reported this morning. Regional banks to report tomorrow: PNC, MTB. Just looking at my list, I cherry picked USB. I know there's some smaller ones maybe there as well. On Friday, we get State Street, STT. We get Regions Financial, which is widely followed. CFG Citizens, which is widely followed as well. Also getting Huntington Bank, which is HBAN. So we're coming in to a lot of bank earnings.
Just getting more information. I know you were saying it earlier this week, Dennis. Let's get the information and then make decisions. And we're getting between inflation data, between other econ, between the start of earnings season, we are getting a ton of new information here this week. And earnings season goes on for, 5 or 6 weeks. So we're going to be getting a lot of new information about how the fourth quarter was here for the next month or so. All right, guys. How you guys feeling? You guys ready to wrap?
Let's do it.
Great
we're
show.
good.
Thanks for tuning in, everyone. We'll see you tomorrow. I'll be back again tomorrow. I'll be here the rest of the week. Looking forward to it. Hope everyone has a great day. Good luck out there, folks.
Have a great day, all.
Great job, Brent.
Thank you.
Wow, that was really smooth. It was a great show. Christian, great job as always. Wow.